Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, it is somewhat timely to provide somewhat frequent updates on the bull market support band, considering that we still find ourselves above it. And so, as of this week, the 20-week SMA is coming in right around $26,075, and the 21-week EMA is at around $25,899. So more or less, the bull market support band is at 26K. So as long as Bitcoin holds above 26K, then technically speaking, you can say that the 20-week SMA is in fact holding as support. All right. So one of the things that we mentioned last week, and I wanted to provide an updated video on it, are a lot of the different milestones, right? There's other moving averages, there's other trends that you can look at to sort of better identify what are some of the obstacles that Bitcoin would ultimately need to overcome. If you're not familiar with the bull market support band, there's this idea that we've spoken about on the channel for years. And it's the idea that holding the bull market support band as support can provide renewed strength to Bitcoin locally. Okay. It was in fact in 2020 when we held it for 6 weeks straight that we said if we hold it, it's going to be a good thing. And why did we say that, right? Well, let's be clear, right? When we held it, I was not thinking that it was going to immediately shoot to new highs. Okay, I mean, just to be clear. But what you'll notice is that in 2017, we sort of held it for a couple months, would move up, we would then hold it for another couple months, we would move up, and then so on and so forth, and we just simply continued to move higher until ultimately it broke, and then the bear market began. Okay, last cycle, we held it as support, and then we just basically took the elevator up to the high. There wasn't really much in the way of testing it and holding it as support. Now, this time, right, we held it as resistance several times, resistance here. We even got rejected here. If you guys remember back in October, November, we put out a video saying, a lot of people get excited about the June low and they call it the bottom, and it's not usually the bottom, right? And same thing happened in 2018 as well. A lot of people thought this was the bottom, me included, in 2018. And it wasn't. We ultimately put in a new low. And one of the things that I think is worthwhile to mention here is that there are a lot of moving averages that we can take a look at, and there's different periods that we can compare to. One of the things that we mentioned last week is the 10-week moving average. Okay, and I want to follow up on that a little bit. If I can figure out which one it was, it must be this one down here. Maybe it's, I might have to add it. There it is. So this is the 10-week SMA and the 20-week SMA. So the reason why we're looking at this is because there's a lot of times in history where Bitcoin sort of it rallies above the 20-week for a while. It then comes back below the 10-week, and then it's sort of between the 10-week and the 20-week. Okay? And that's where we find ourselves right now. Now the 10-week SMA is at around 28,200. Specifically 28,176, but it's around 28.2K. So we're just sitting below that, but we're above the bull market support band, right? So sort of between a rock and a hard place. And I think the thing to look at is when in history has this happened? When in history have we found ourselves between these two moving averages? Well, most recently it happened back in March. Now, this, though, was a very quick test of the 20-week SMA. It's not like what we saw in 2017 where you had like 2-month tests of it, or in 2020 where we had a month and a half test of it, right? This was just a brief wick. We had the not QE, and then Bitcoin exploded back up to the upside. So if you don't look at that one, which again, there could be some merit to looking at it. You go back and you look at 2021, right? So we have that period in 2021. Let me actually highlight this in a different way. We'll draw circles. So you have this period here in 2021 where we went below the 10-week. We had a weekly close below the 10-week. We held the line, and then we ended up pushing higher. Okay. We followed that, right? We said we should push to new highs after holding this, And we did. I mean, we were also much closer to those highs at the time. Unfortunately, it wasn't much higher than the prior high, but technically it was a new high. There's another period here in 2020 where you can see that we dropped below the 10 week. We spent 6 weeks between the 10 week and the 20 week, and then ultimately it held as support and we moved higher. If you go back again, further back, you'll see there's a period here. I don't really know if we should spend a whole lot of time looking at this one because this was the pandemic drop and everything just sort of plummeted out of nowhere. You can, I mean, look, I give people sometimes a hard time for calling everything a black swan. I think there's a good case to be made that, you know, something like this was in fact a black swan, mainly because, you know, in order to see moves as quickly down in the stock market as we saw, it has to come out of left field, right? Like if you think about today, right, there's always something to worry about, right? We call it climbing the wall of worry. There's always something to worry about, whether it's the Fed raising rates, whether it's inflation remaining sticky, whether it's the debt ceiling, whether it's probably going to turn into student loan repayment. There's always something to worry about, but oftentimes it can take something that no one is thinking about to actually cause a major dump. I mean, you can have corrections, right? Like if something happens that is bad enough, right? I mean, you can have a 10% correction. You don't even have to have a news headline to have a 10% correction. It's just, or a 5 or 10% correction. It could just be that everything went up so quickly, and then now it's time for it to just correct because there's going to be some people that are going to sell, and it's going to temporarily override the buying power. So you could have 5 to 10% corrections, but to get like the types of corrections we saw back when the pandemic hit, it normally needs to be some type of black swan event that no one's really predicting. Okay, it's sort of like how we've mentioned before, right? Like the debt ceiling getting cleared and TGA having to get refilled. Theoretically that would suck liquidity out of the system. Now that could put headwinds on the market, but it's probably not going to lead to an immediate capitulation. Okay, so the other time to think about though is 2019, where you'll see that we dropped below the 10 week. So we were sort of between the 10 week and the 20 week for quite some time. So we're going to take a look at that one as well. And we're also going to take a look at this one in 2020. Okay, so these are the last 2 times that it occurred. Of course, you can go back further in history and find other times where it occurred. But the last 2 times that it occurred during market conditions similar to the ones we're in now, I suppose you could say 2019 and 2020. Now, the market conditions, of course, in 2020 were a lot different than today. I mean, the Fed just printed $6 trillion. You know, interest rates were basically at 0%, and we had people flocking into the space, right? The social risk was going up. Now the social risk is going down. But one of the things I want to talk about here, in both cases, we actually spent a bit of time between those 2 moving averages, right? It wasn't just a week or 2. But in 2019, you'll notice a difference in the sense that we had a weekly close below the 10 week. We then rallied back above it for a few weeks, right? I mean, you can see we had 2 weekly closes back above it before it ultimately faded back down. This ended up being a lower high. Okay, this ended up being a lower high. And we got back below the 10 week. We eventually got to the 20 week SMA, and then you can see we weren't unable to get back above the 10 week in any sustained way back in August and September. And then by the time the end of September came, we had that 20% move down, right? You know, the bulls could no longer hold the line, and they had been fighting to hold the line for a long time, but unfortunately they were not able to do it. And then we sort of entered into another sort of like mini bear market. It wasn't like a 2018 bear market. It wasn't nearly as bad, but it was still a period where sentiment in the space pretty quickly turned bad, and no one was really interested in crypto for the next like 8 or 9 months or so. And then things started to turn back up in the summer of 2020. I'm sure a lot of you guys will remember the DeFi summer of 2020, which was very exciting. Now, where are we right now? So again, in this period where we just had 2 weekly closes below the 10 week, Bitcoin's trying to get above it right now. So far, it has been unable to do so. Now, I imagine this week is going to be a significant week with the vote on the debt ceiling and all that stuff, or the vote to raise the debt ceiling and all that stuff in Congress. So I do imagine there will be a lot of volatility in both directions. So do be aware that you probably will see a significant amount of volatility this week. Again, in 2019, we did rally above it, but ultimately it was faded. In 2020, we got above it and it wasn't faded. So you're probably wondering, right? Like, well, how do you navigate something like this? You don't know what's going to happen. Well, I mean, I don't know what will happen. I don't know if it will hold as support or not. That's the honest truth. I have no idea if it will hold or not. The way that I've hedged myself for quite a long time is my crypto portfolio is just simply Bitcoin heavy. And I'm also have a sizable cash position in case we do see a correction. That is the way I think that's my non-financial investor. That's the way I am navigating these markets. Because, and you might wonder why. Well, the reason is because the dominance, I think, should go higher, right? And I don't find a compelling reason to look at the altcoin market as something that's worth the risk. Now, that doesn't mean the altcoin market won't go up on their USD pairs if Bitcoin does. It's just that we've seen time and time again that when Bitcoin does move up in 2023, what happens? The dominance goes with it. So if the altcoin market is to move up in any type of sustained way, then arguably it would have to come on the back of Bitcoin moving up first and or with it. And so the risk that you want to take on, in that I've been taking on anyways, has been limited to Bitcoin, right? And if Bitcoin corrects, then you have a cash position, right? So I mean that's sort of how I navigate it, mainly because I think, and I've thought for a long time that the altcoin market is just systematically bleeding back to Bitcoin throughout this phase. So what I'm looking for here is, do we get back above the 10-week, but more specifically, do we take out this high, okay, the 31K? I've mentioned several times this year that that we likely would see about half up and half down in terms of monthly candles. So far, we've had 4 green candles. So, you could have 2 or 3 more green candles this year, and it still wouldn't necessarily negate that hypothesis of about half up, half down, just like we had in 2019, just like we had in 2015. The other thing that I think is worthwhile to take a look at are some of the daily moving averages, okay? Because this is something that we also covered in the video last week, and I'd like to touch base on it again as well. We had daily closes below the 100-day, okay? Now, we also had daily closes below the 100-day SMA in 2019 as well, and also in 2020, okay? So again, right, like it depends on what your bias is. If you're a bull, you're probably going to say, well, it's more similar to this period where you had a daily close below it, we got back above, and then ultimately we just rallied on up. If you're a bear, you're probably going to say, well, what about this, right? What about this period where we had a daily close below the 100-day moving average? And then ultimately, you'll see that in both cases, we had a daily close below, and then we rallied back up in both cases. And in both cases, after rallying back up, after going below the 100-day, we went below it again. The difference between 2019 and 2020 was that in 2019, once we got back below it, we just faded it from there on out. We had some wicks back above it, and then of course by the time we got into the halving year, we got back above it. And maybe this would have been sustained had the pandemic not have happened, right? Could have, would have, should have. I mean, who knows? But at the end of the day, in 2019, this faded after getting back above it. In 2020, we got above it, we came back down below it, and then we popped back above it, held it as support, and then blasted off. This process here took about 6 weeks. If you take from daily close below the 100-day until we really held it as support in a sustained way and then moved up higher, is about 36 days. In this case here, from when we got below it until when we fell below it, was about 21 days. So about 3 weeks. So you have a period of, 3 to 6 weeks, somewhere in that period where that's what essentially happened the last time we were looking at a case where we fell below the 100-day, got back above, and then in one case in 2019 we faded it. In 2020 we rallied. Okay? Now again, it depends on if you're a bull or a bear, what you're going to put more weight in. I mean, I will say Bitcoin has been strong this year. It has. And it's been a lot stronger than the altcoin market. But there are some similarities. I think you could find some similarities in both scenarios. For instance, one of the similarities in 2019 compared to today, so if you look at this period here in 2019 compared to where we are today, one of the similarities is we had an inverted yield curve, right? So if you go back and and look at, let's go take a look here at the macro stuff. So let's go look at the yield curve. Actually, we're going to look at treasury yield spreads. You'll see again in 2019, right? We had an inverted yield curve in August and September. And I can overlay Bitcoin's price if that would make more sense, right? So if we sort of zoom in here, 2019, it was an inverted yield curve, just like we're in today. This one's a lot more significant today, but it's still there, right? An inverted yield curve, it did not hold as support. In 2020, when it did hold as support, it was not an inverted yield curve, right? We had a lot of, this was actually going higher. So that's one similarity between today and 2019. And you'll notice here, if you zoom in, that Bitcoin just had a daily close below the 100-day, and then it popped back above. And then if you go back, again, remember to these two scenarios, in both cases, we went below it and popped back above and then went below it again. So if that's any indication, then there could be some in not too distant future that we go back below it and then we see what's what and who's who, right? Then we figure out, okay, is this a sustained move or is it going to fade like 2019? Now to sort of throw a bone to the bulls as well. I mean, one of the similarities you could argue about between today and 2020 is that there is a lot more money out there. I mean, like there's a lot of money printed. Okay, there's a lot of money printed over here. That money is still theoretically in circulation. I mean, the money supply has been going down. I mean, if you go take a look at M2, if you look at M2 and you look at say like the year over year percentage change, I mean, and if you adjust for inflation, it's at negative 9.14%, right? Which I mean is not something that commonly occurs. There was still a lot of money printed, and it's taking a long time for the Fed to drain that liquidity. And I think they're going to try to continue draining it until they get a handle on things. So it doesn't mean that the stock market hasn't been able to climb the wall of worry. It has been climbing the wall of worry, and the Fed just continues to raise rates. It's almost like a game of chicken. Who's going to cave first? So we're in this scenario, right? We had the daily close below the 100-day. We talked about this last week. We popped back above it, just like 2019, just like 2020. The question is where do you go from here? Okay? Now, one of the things we talked about before, and I'll mention it again, is, and I know people might roll their eyes when I sort of work in the dominance into every single video. But, I mean, look, I think it's an important metric. I think a lot of people have underestimated its importance for a long time. And if you roll back the clock, 6 months ago when the dominance was at 38, 39%, a lot of people were calling for it to tank and go to 20%, 30%. And look where it is today, right? It's just comfortably sitting above 48%. And everyone's sort of losing interest in crypto. Views are down across a lot of YouTube channels. And it's not just mine. You might say, well, Ben, maybe it's just yours because you're boring, But even the people who arguably aren't boring, views are going down as well. And so that is something that I think we're all having to contend with is people are struggling just to stay interested because the price hasn't really moved in 2 months. I mean, we were legitimately at the same price March 18th. And I mean, when you think about it, I mean, I think a lot of us have been pulling our hair out, whether you're a bull or a bear, pulling your hair out as to which way this is going to break. And it's basically just gone sideways for the last 2.5 months. So I think it is draining people. People are starting to lose interest, and they're only going to return once volatility returns. So again, you do have the 100-day and the 100-day moving average here. The other thing that we could take a look at is, I believe it was at the not the 200-day, it was maybe the 50-day. No, I think it was the 20-day I was looking at earlier. So in 2019, you'll see that once we had the daily close below the 100-day, right here, we popped back above the 20-day, and then we faded back down. Right now, we just popped above the 20-day again, right? We just popped back above it. And another thing that's interesting when you compare these two times is if you look closely, right, there was a cross here. So the 20-day crossed below the 100-day after we had this daily close below, right? So you saw the cross below, the 20-day cross below the 100-day, and during that rally back up, and then it faded back in. In 2020, the 20-day never actually crossed the 100-day moving average, right? It never actually crossed it. In 2023, it hasn't crossed it yet, right? I don't know if it's going to, you know, but this is something that I think is also worthwhile to keep an eye on, is that this 20-day has not actually crossed the 100-day moving average just yet. If you were to go back and look at the last 20 days, right, just to get an idea of what it's going to do, we're going to start the 20-day SMA. If we try to get an idea of what direction it's going to go, I mean, first of all, as long as the price is up here, you would expect the 20-day to start to curl back up. Okay, it's only if it were to fade back down that that the 20-day would actually cross the 100-day in the short term. Now, in the in sort of like a more medium-term time frame, if you look back at like 100 days ago, where Bitcoin was 100 days ago, you can see that this is sort of looking at a local high. So as we start to exclude these data points, right, we're basically going to exclude some of these and then replace them with some of the ones up here. And as long as that's the case, I mean, the 100-day SMA should continue its general uptrend. Okay, so that was something I was looking at as well. Like the 20-day has not crossed the 100-day yet. It did cross in 2019, right? You can see that it crossed right here, and it kind of just remained flat for a while. In 2020, it never crossed. Okay, and you can see we kind of hugged it for a while, but it never crossed, right? This one hugged it for a while. The 20-day stayed above the 100-day. This one, back in 2019, we hugged it for a while, but it was slightly below it. So I think that's something that we should look at as well. The other thing that I want to mention is the dominance, right? And I want to talk about this very concisely if I can, as well as I can. So one thing to consider here is that in 2019, we had a series of lower highs, right? Lower high, lower high, lower high, lower high. Okay. In 2020, I mean, the market, it was a completely different market, right? I mean, this was sort of a move up. We came back down, back tested the 20-week SMA as support. It wasn't really a series of lower highs in the same sense. I mean, I suppose you had a couple here, right? You had a lower high here, you had a lower high here, but that was, I guess maybe you call that one. But the shape of the market structure was, of course, different in 2020 than 2019. Okay, I think we can see that pretty clearly. But one of the things that I wanted to mention and just sort of reiterate here is I want to overlay the dominance of Bitcoin. And the reason I talk about this is we've talked about this thesis for a long time. Okay, I've mentioned this I don't know how many times. And, I feel compelled to follow it through until it's either proven inaccurate or until it proves itself out, right? There's this idea that the Bitcoin rally lasts until the dominance range, the top of the dominance range is broken. And I've mentioned this many times, right? I mean, I've mentioned this so much, in fact, that people have literally sent me messages and whatnot telling me to stop being so repetitive because I've heard the same thing over and over and over again. But I will mention it once again, okay? Because it could play out like this. It doesn't have to, but it could. And because it could, I do feel compelled to at least talk about it. I think it's always good to manage your risk. Doesn't mean that it has to play out. But there are two scenarios where in recent history where the dominance broke up, right? Where you had significant rallies in the dominance, okay? And where were those? You can see one here in 2018 and one in 2019. Now, I know what you're thinking. You're probably saying, well, Ben, there's no reason to compare it to 2018, right? This is a pre-halving year. Compare it to 2019. And we will compare it to 2019. And we'll do that first. But we're also going to compare it to 2018 as well. And I'll explain why. But I do want to at least compare it to 2019 first, okay? So why compare it? Why look at the dominance? Well, look closely at when the rally by Bitcoin faded, okay? So you have Bitcoin over here, and then you have the dominance up here, okay? So the dominance, if you remember, if you're in crypto back then, the dominance essentially had this range high that it hit in I mean, you can see it hit several levels, right? Like this was September of 2018 is kind of that level that it rallied to, okay? And what you'll notice is that we sort of had sorry, I messed this up. We sort of had a false breakout of the dominance in May, right? But what happened in May? The dominance faded back down. The sustained break of the dominance from this range high did not occur until June. Now, draw the line across when we broke the dominance range high in a sustained way, right? That wasn't just immediately faded. What did that mark if you draw the line down? It marked the top of the rally. Okay, it marks the top of the rally, right? I think we can see that pretty clearly. Okay, so, that marks the spot, right? It marks the spot right here. Once the dominance broke its range high, that marked the top of the Bitcoin rally. Did it not? We can see that clear as day. But what's interesting, and we've talked about this forever, right? What's interesting is that the dominance continued to go up, right? So the dominance was at 60% at the end of this rally. But the dominance continued to go up to 73%, even after the rally was over. Okay? So there's this idea, and I've talked about it before, is that the strength can continue until the range high on the dominance is broken, right? So that's if you want to compare it to the pre-halving year of 2019. You can see pretty clearly that once this level was broken, in a sustained way, it marked the top for the rally. Now, we broke it over here, and it did not mark the top. But the dominance faded back down. Let's go look at 2018. Okay, let's go look at 2018. Very similar thing played out, in fact. Okay, so you essentially had a very similar thing play out. We had this range high on the dominance, at around 50%. It was like 50, 51% or so. Let me sort of try to get it exact here. This is the level, right around 50% or so. And Bitcoin, the dominance rally started. And at some point during that dominance rally, right, you can see it started off slowly, just like it did, just like it did in 2023, right? It started a little slowly, and then it picked up steam. And what you'll notice is that when did this rally by Bitcoin USD fade? What marked the local high on it? Draw a line. That's the top of the Bitcoin USD rally right here, right? Let me fix this. Okay, so this is the top of the rally in late July of 2018. Well, what do you notice about this rally? Guess where it corresponded to? The local high on Bitcoin USD corresponded to breaking the dominance range high. That's what marked the end of the rally. So in 2018 and in 2019, Bitcoin rallied until the dominance was able to break its range high. And then after that occurred, after it broke the range high, we saw a correction in Bitcoin, but in both cases, the dominance continued up. Now, you might say, well, why compare it to 2018? Why not just compare it to 2019? And you have a valid point. Like, maybe we should only be comparing it to 2019 because 2019 was the pre-halving year. But I also think that this market throws us curveballs occasionally, and we should compare it to other times as well. And the other reason to maybe compare it to 2018 is because the dominance, coincidentally, started at the same level when the rally began, right? I mean, you can see that this rally started right here. The dominance started at around 39%, just like it did over here, right? It started at around 39%. And this rally by the dominance went up when Bitcoin USD went up until the dominance got to that prior range high. And then after it rallied half of its entire rally, the rest of the rally was when Bitcoin went back down and it was sort of just correcting back down. So what happened was Bitcoin corrected. It told the altcoin market, hey, just kidding, right? The bull market's not on. And then the altcoin market threw in the towel. And then they got wrecked against Bitcoin. So what can we learn from this, right? Well, what I take away from it is we have two things here to look at. First of all is if Bitcoin holds the line. right? If it holds the line at the 20-week. History shows us that when it holds the line, like in March, the dominance shoots up. So if it holds the line and the dominance, I would expect the dominance to shoot up, and then I would expect a lot of these altcoins to bleed again on their Bitcoin pairs. That would be my expectation. Okay, and if it doesn't hold the line, maybe it rallies back up a little bit, and if it doesn't hold the line, then you would expect the dominance to still go up, just like it did in 2018 and just like it did in 2019. And in those cases, Bitcoin USD went back down after the range high on the dominance was broken. If Bitcoin rallies beyond where the dominance range is broken, let's say it gets to 49 or 49.5%, I believe the actual number is 49.23% for those who care. But let's suppose that Bitcoin gets to like 49.5%, the dominance, and it's still, the Bitcoin USD valuation is still going up. I would still expect the dominance just to keep going with it, right? So that's something, something to at least consider. And, the other thing that I wanted to mention as well here is, when this happened in 2018, it might be worthwhile to look really, really closely, because it didn't actually mark the exact top. Okay, if you look really closely at the rally. So I want to make sure that I show it as clear as I can, just in case it matters. There's a chance that it won't matter, right? There's a chance that it plays out completely different this time. A good chance, right? But in case it matters, I do want to at least draw your attention to this idea of, Bitcoin hit a local high here, right? And then, but at that local high, right, at this local high, you can see that the dominance sort of hesitated a little bit at that level. We actually came back down a little bit below the range high. And then it was on sort of a lower high that the dominance broke out in a sustained manner. So the dominance broke out here in a sustained way, even though, like, after that breakout here, you can see that Bitcoin USD just put in a lower high, right? So something to at least consider. Now, if you look at 2020, right? So we can go look at 2020, and if you look at the dominance over here, so in 2020, the dominance here was around 46%, 46% in September 2020 when it was sort of testing this. And then it rallied, and when Bitcoin held the line at the 20-week, what happened? The dominance just kept going up, right? And it went back up to around 73% or so. And so this is why I continue to beat this drum of, like, I continue to wonder what the draw is to the altcoin market when it seems to me, I feel fairly convinced of it, though I get things wrong plenty at the time, often. So again, I mean, like, it could play out differently, but it's hard for me to get that interested in the altcoin market when it just seems like the dominance is going to go up no matter what, right? Like, if we break the range high and then Bitcoin corrects, the dominance goes up. If we hold the line and Bitcoin USD goes up, then the dominance goes up. Sorry, did I say the dominance correct? I don't know. But either way, right? If Bitcoin USD goes down, then the dominance should go up. And then if Bitcoin, as long as it breaks the range high, and if Bitcoin USD holds the line and goes up, then the dominance should also go up. And so that's why I have a hard time getting that interested in the altcoin market. One thing that I said, and I want to briefly talk about this because it actually relates to the bull market support band and making some comparisons. One of the things that I talked about quite extensively on ITC Premium is that in 2022, what I frequently said was that the altcoin market, for me, right, is not even worth consideration until there was, like, more than one thing, right? One of them was until December at the earliest, right? December 2022 at the earliest. Now, in retrospect, December 2022 did mark the low on total 3, which is the altcoin market, right? It's everything besides Bitcoin and ETH. However, the reason why I still have been hesitant with the altcoin market is because the dominance is so low. It was, I want to see it December at the earliest, but also I want to see that range high on the Bitcoin dominance broken, 49%, and I want to see us go above that. And that's where I get interested. Now, look at this. You might say, well, would it not have been a win to collectively buy alts back in December? They're up 22%. Hey, 22% is 22%. In chess, a pawn is a pawn. I mean, it's something. 22%. But wherein lies the problem for me is, to me, this is not a win when the Bitcoin USD valuation during that same period, right, is up 78%, right? So again, like, do you pat yourself on the back if you're holding an altcoin that's up 20 or 30% because it's up its USD valuation when Bitcoin went up a lot more? I care about this. I care about that. And I had a several days in 2022, I was debating whether I wanted to go this route or not. Right? Do I really want to go this route, or would I prefer but believe me, guys, the easier route here would just be to not, to at least, personally care about the Bitcoin valuations of altcoins, but not to publicly talk about it, because the truth is most people don't care. That's the honest truth. Most people don't care, and I'm not going to convince them that it matters. For me, I can't help but think, right? Like, if you're going to take on the risk of crypto, and the blue chip Bitcoin, has better risk adjusted returns, or it looks like it's going to outperform because the dominance is in a position to move higher, why take the risk in the altcoin market, right? I mean, Bitcoin's up 78% during the same period where total 3, the altcoin market's only up like 22%. So yes, I mean, maybe if you don't care about the Bitcoin valuation, you count it as a win. But I would also say, had you just, if you were willing to put the money in crypto in the first place and you wanted to put it in Bitcoin or an altcoin, Bitcoin has outperformed the collective altcoin market. Now, I understand you can cherry pick a few altcoins. There's been plenty that have done better than 77% this year. And I'm not trying to say that, I'm not trying to take anything away from that. We know that always happens. But I will say that, be that as it may, the altcoin market as a whole, because we can always cherry pick, right? But the altcoin market as a whole has underperformed. Here's another way, by the way, if maybe this way to visualize it is better. Take a look at total 3, okay, divided by the Bitcoin market cap, right? So you're looking at the altcoin market cap divided, including stables, divided by the Bitcoin market cap. And to me, like, this just looks like this looks like, it oscillates, right, between this range. And right now we're at we're sort of in the middle of the range, but the momentum is taking us down, is what it looks like to me. Now, that doesn't mean that we can't, spend some time in here, but it seems to me like the more likely direction is for this to ultimately come back down this way. You can also look at total 2, which includes Ethereum divided by the Bitcoin market cap, and see something very similar, although in this case, we are currently testing the range lows, right? So, I guess it depends on do you think that this will hold or not? If you think it holds, then, the altcoin market, you might like the altcoin market. If you think this breaks, then the altcoin market is still very risky. Now, I wanted to mention a risky relative to Bitcoin. Remember, the altcoin reckoning is on their Bitcoin pairs. I wanted to mention something else, because there are some other similarities and differences that we can take here between where we are today on the bull market support band. So Bitcoin is above its bull market support band, right? Clear as day. It's above it. And in 2020, when we held it as support, we were above it, right? Clear as day. Above it here, we're above it now. Look at total 3 in 2020. We were also above the 20-week, right? Total 3. The altcoin market looked strong back then. I was very pro altcoins back then. I thought they were worth the risk, right? I was talking about it all the time. Above the 20-week SMA in a sustained uptrend. What's going on with total 3 today? Well, I mean, right now we're below it. We're below the bull market support band. We've been below it for weeks. We've had 3 weekly closes below the 20-week SMA. Now, you might say, well, Ben, total 3 includes the stablecoin market. That's a valid point, and I'm glad you mentioned it. If you do subtract out the majority of the stablecoin market, so let's say you subtract out, USDT, you subtract out USDC. I'm trying to remember what it is. I think it says, yeah, if you subtract out DAI, if you subtract out BUSD market cap, you still see something very similar, right? It doesn't really make a huge difference. But it was a good thought. So in this case, you're still looking at a period where you're getting weekly closes below the bull market support band for total 3, which is different than what we saw back in 2020 when we had wicks below it, but we were holding the line on weekly closes for total 3. Okay, now I'm going to go back to total 3 without stablecoins just because it actually has history going back further than if I use some of those ones that haven't been around as long. Here, total 3 was holding the line. Here, we're not. In 2019, total 3 fell below the bull market support band. Okay? But when did it fall below? Did it fall below when Bitcoin did? No, it didn't. The total 3 fell below it in July. Bitcoin didn't fall below it until, I think, September. I mean, it was an extra 2 months. And you can see that total 3 fell below the 20-week back in May. So it's already, I mean, if this week closes below the 20-week SMA as well, I mean, you're already looking at basically a month below the 20-week SMA for total 3. Okay, so that I think is something to pay attention to, and let me phrase it like this: if total 3 is unable to get back above its 20-week SMA in short order, then it could be a sign that this rally by Bitcoin is more so a function of liquidity from the altcoin market going to the relative safety of the blue chip, or the blue chips, right? Bitcoin and ETH. In this case, we're talking about Bitcoin, but Ethereum's also been doing well. The Ethereum dominance has been holding about 20%, which is impressive. So if total 3 is unable to get back above the bull market support band, then it shows, in my opinion, that liquidity is not really coming into the altcoin market. It's just Bitcoin's rally is being supported by a liquidity drain from the altcoin market back into Bitcoin. If liquidity comes in, if a lot of liquidity comes in and can get the altcoin market back above its 20-week SMA, then that would be a bullish sign in a sustained way, right? If it can get back above it and hold it, then that would be a more bullish sign for Bitcoin to sustain the rally like 2020. But the issue is that if it stays below this level, like it did in 2019, then it could be a sign that the market is fading, right? And in this case, once we had weekly closes below the 20-week, it meant the high was in for Bitcoin. I mean, the altcoin market got below the 20-week in July, and Bitcoin hit its peak in June. Over here, the altcoin market got below the 20-week SMA in May, and at least locally, the local high for Bitcoin is in April. Again, will it break below or not? I mean, look, Bitcoin's been resilient so far this year. And I've said before, right, like if it wants to push higher, I think it needs to do so in the first half of the year. Now, I mean, there does exist a scenario, of course, where it pushes higher in the second half of the year. But that's been my thesis, is that if it's going to, it should do so by June. Like we should know, I think, by the end of June what's going to happen. I mean, if we're going to get the move to say like, the mid 30s or something, I imagine it's going to come within the next 4 or 5 weeks or so. If it doesn't happen then I don't know that, I mean, we could just end up fading it like we did over here in 2019. So a lot of things to consider. I mean, again, like you can find comparisons, if you're a bull or a bear, you can find plenty of comparisons to sort of support your own thesis. Just to say one for the bulls, just because I just did a couple for the bears. I mean, here you could argue that we held the line here, sort of. I mean, we didn't really go down to it, and then we did it again, and then maybe we're doing the same thing here, right? And we're just climbing the wall of worry. So, I mean, regardless, my opinion is, right, the dominance should go up no matter what, and it's slowly climbing. I mean, it's slowly climbing. And if you look at the 10-week SMA on the dominance, you can see that it held here in January, and then it held in March, and then now it's theoretically holding in May. And eventually, I think it's going to come up here and sort of squeeze this level, or squeeze into this level at 49%, and I think it's going to break above. And then the question is, right, is what happens when it breaks above? Does that mark the local high for Bitcoin? Or even if it's a lower high, like in 2018, it was technically a slightly lower high. Does that mark the end of the strength, or does it follow what Bitcoin USD did in 2020? I think one of the things to look for, as I said before, look at the altcoin market. I mean, I think the cryptoverse is fascinating in some sense because you can use various sectors of crypto to kind of tell you, or at least get an idea of what's going on. You know, the altcoin market as it stands is still looks, it has been relatively weak. Again, I'm not saying that some of them haven't gone up. Some of them have. I mean, Ethereum is at a $1,900. Okay, I mean, there's plenty of altcoins that are up some, right? The question is can the altcoin market as a collective get back above its bull market support band? If you include ETH, it is above it, right? So that's something, that's something to consider. We did go below it though, very briefly. And maybe I have to take that back. It's not below it, or it's not above it. We're actually below the 20 week. So we're above the 21 week EMA. Okay, so we're above the 21 week EMA when you look at total 2, which includes ETH, but we're still below the 20 week SMA, I believe. I mean, you can see we're at 581.2. The 20 week SMA is at 583.2, basically. So I mean, it's just a little bit higher, a couple $1 billion higher than where we are right now, right? What's a couple $1 billion among friends? So not too much higher than where we are at the current time. So what I'm going to be watching for over the next couple of weeks is, does Bitcoin get, does it go back below the 100-day? And if it does, can it get back above, or does it continue to put closes below it like 2019? Or does it follow 2020 and maintain a level just above the 100-day? Okay, so I'd look at that. I would look to see if total 3 can muster up the courage to get back above its bull market support band, because if it does, then it might be a sign that some liquidity is entering into the market. If it doesn't, then it might be a sign more so like 2019 that the rally is only, and 2018, that the rally is only being supported by the bleed of the altcoin market back to the blue chips. We're actually seeing something very similar go on in tech stocks, right? I mean, look at the ones that have held up the S&P this year. It's only like 7 names that account for basically the entire move in the S&P 500 this year. You could argue that it's a very similar idea, that people are fleeing the lower market cap plays for the relative safety of the higher market cap plays, because they offer more liquidity and they might be a safe haven. Not to say that during a bad event, it's not to say they won't go down. It's just that because they have more liquidity, they probably wouldn't get hit as hard. And so there is this idea of, is this a flight to safety? I mean, so far the U.S. economy has been resilient. And I've said before that I don't think we're in a recession. I don't think we had a recession in 2022. I don't think we've been in a recession in 2023 either. I just think that at some point we're going to get the uninversion of the yield curve. Who knows if that's going to be 6 months from now, 12 months from now, 18 months from now. Who knows when it's going to happen? The bond market thinks it's going to happen by November. But at some point when that happens, that's where we normally get the recession. So I don't really think we're in one right now, but one's probably going to come at the end of all this, because at some point the Fed's probably going to break something in their quest to fight inflation. And I mean, arguably they haven't done it yet. I mean, at least what they did break, they were able to solve very quickly. The issue is if they get to something that they can't just solve by sort of putting a Band-Aid over it. So again, I would watch the 100-day for Bitcoin, see if Bitcoin holds the 20-week estimate at 26K. Look, I mean, if look for a potential, if it's a lower high or a higher high. Look for total 3 to see if it can get back above its 20-week estimate. If it can't, it's not a great sign. If it can, then it might sort of turn sentiment around. And I think that's probably mostly it. Probably what you should look for over the coming weeks. So I think we'll wrap it up there. And if Bitcoin does push higher, I mean, if it does sort of take out this level here, right? If it does push higher, look for the dominance. Look to see where the dominance is, and look to see if there's any type of change in behavior above 49.23%, right? I mean, who wants to know specifically, but look at around 49.23% or so. That's the prior range high for the dominance back in 2021. If nothing fundamentally changes, then that would be something to note. If it does fundamentally change and Bitcoin sees a correction after the dominance range is broken and the dominance holds, then that would be a similar case to look at for the pre-halving year back in 2019. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out Into the Cryptoverse Premium at intothecryptoverse.com. Thanks for tuning in. I'll see you next time. Bye.